He's been gone for a little while. He's finally back. Peter Hug will be joining me this week for this week's edition of For Pete's Sake. Stay tuned. Hey Peter, thanks for joining me today.
You're welcome.
Peter, you've been gone for a few weeks. Where were you?
Well, I was over in Hong Kong with visiting our Hong Kong office and very impressed with the demand for physical gold in that market. The Asian investors are stepping up. We're seeing a lot of large individual buyers of physical gold in the Hong Kong market.
Now, since it's been such a long time since you've been with us, how about a quick recap about what happened with gold in September?
Yeah, I think when I spoke to the audience last, I believe it was around Labor Day. If my memory serves me, I think gold was in around the 1720-ish area. And if I remember correctly, I indicated gold breaking up through 1728 would immediately see 1750. And then if we breached the 1750 area, 1778 was a fairly significant resistance level. And that level has been tested about 3 times over the past week and has held. So I'm looking at not being aggressively bullish this market until 1778 on a close basis is clearly surpassed. And then I think we see 1820 in short order. However, if 1778 is not breached soon, I think the market is going to try lower. I think there'll be some profit taking. This has been a significant move over the past 2 months, almost, well over $200 in gold, and in silver, approximately $8 an ounce. So I would not be surprised to see some profit taking come into the picture here. But this market is very constructive, and I would be buying gold and silver on any pullbacks. Pullbacks to me on silver would be anything in the 3250 range or below. And gold, anything under 1680, I think is an excellent buying opportunity.
Now, with quantitative easing 3 and European issues over the last few weeks, what can we expect gold? How can we expect gold to react to that?
Well, I think what was relevant with Bernanke in his last speech wasn't so much that he said quantitative easing would continue. I think everybody expected him to say something along those lines. I think what was very significant in his speech were 2 points. One point was that he was going to continue quantitative easing until 2015. And the second point, which to me was the most dramatic of his statements, was that even if the economy began to recover, he would not take his foot off the accelerator. He wanted to see this economy and the economic recovery take hold firmly before he took his foot off the accelerator. So he gave a green light both to the equity markets and, to my opinion, the commodity markets, at least in the short term. But this is a headline market, and as we noticed this morning when the Fed Governor Poser came out and indicated that the Fed may lift its foot off the gas before 2015, it took an edge off the market. So this is a trader's market, but again, I'm very constructive on these markets between now and the end of the year.
All right, Peter, to wrap up, how about a short-term trading range for gold and silver from now until, say, the American election?
Yeah, I think there may be some profit taking. If I had to pick a range, I'd be in the range for gold of 1650 to 1820. I know that's a wide range, but if gold breaks 1720 on the downside, 1675.80 would be an almost immediate target with then a test of 1650. It's a wide range, but it could happen very quickly. It could happen over a 3 or 4 trading day session. Silver, I think there should be significant support in the 3220 range with resistance at 3520, 3540. All of these levels are, again, on a closed basis. I ignore the intraday moves and look at the close for the markets to determine whether or not price points and chart levels have been breached.
Peter, thank you very much for joining me today. Very much appreciated.
You're welcome. I'm glad to be back.
And thank you for watching this week's edition of For Pete's Sake. If you have any comments or questions for Peter or I, please send them to newsfeedback@kitco.com. I'm Alex Letourneau for Kitco News.